Welcome back to Market on Close. I'm Caroline Woods, live from the New York Stock Exchange. For more on the market's performance today, let's welcome in Ivan Feinseth, Senior Partner, Chief Investment Officer, and Director of Research at Tigris Financial Partners. Ivan, welcome to the show. Great to see you.
Great to see you. Thanks for having me on.
So we're going to talk big tech ahead of a key week of earnings. But before we get to that, I just want to get your thoughts on the market right now as we kick off a new week and also as we wrap up a pretty volatile month of April. Final trading days, what do we have? 2.5 days left.
Well, I'm still bullish. I think that these dips will have shown to be a buying opportunity. And on any time, the slightest possibility of a trade deal with China is going to send the market significantly higher. I think the benefit of the doubt continues to be to the upside, and I think that China blinks first.
Okay, so as we think about the four names in the Mag 7 reporting this week and their distance from the highs, Meta's off 26% from the highs, Amazon 23%, Apple 19%, Microsoft 16%. You're buying that weakness?
Absolutely. I got buys on these stocks, much higher price targets. I think that this pullback will be a buying opportunity in this multi-decade long AI investment theme.
At what point do we start to see some turnarounds in these names that were once high flyers but have been really, based on their percentage from the highs, crushed this year? Do you think it's going to be this week with earnings?
Well, there's still a lot of overhanging cross currents of, where the Fed is as far as monetary policy. President Trump pushed back hard on Fed Chair Powell. Stocks sold off. He backed off. Stocks have rallied as part of both a potential trade deal with China and other countries, and the fact that he pushed back against he pulled back against calling to they're saying he was going to fire Fed Chair Powell. The market would not have liked that. And I think that pressuring Powell to lower rates will not work. It backfired on President Trump in December of 2018, where Powell turned around and raised rates. So I think that we are close to getting a rate cut. We could see this early as next week on the 7th, especially if we see further downward trend in inflation with PCE out Wednesday. And any further weakness, another uptick in the a surprise uptick in the unemployment rate with the April jobs report out Friday, tilts the risk to an economic slowdown and labor weakness versus higher inflation. And I think that the Fed has to cut rates significantly to bring the Fed funds rate in line with the Treasury market. You look at the Treasury yield curve, and pretty much the Fed funds rate at 4.5% is above the 1 year, the 2 year, the 5 year, and the 10-year Treasury. It should be probably somewhere about 3.5% versus 4.5%.
But Ivan, explain to me why the Fed cutting rates because the economy is weakening would be a good thing for the stock market.
Well, I think the economy may not be weakening, but I think the Fed has to act preemptively. And the fact that the Fed has to first of all, I believe that inflation coming out of the pandemic was supply driven. And they should have kept rates low just to increase investment and increase production and manufacturing to increase supply to meet demand. And that would have put downward pressure on inflation. The fact that he started to raise rates in March of 2022 and raised them a little bit too high, he began to cut them, and then he didn't cut them soon enough. And the last cut, was a 50 basis point cut. But sadly, the Fed is always, they raise too late and they cut too late. They have to be more preemptive in lowering rates, and I think the bond market is certainly saying that. Yet the yield curve is positively sloped. So, after going through, over 3 years of an inverted yield curve, which was predicting a recession that never happened. So Powell did a good job of avoiding a recession or creating the soft landing. But now he's got to prepare for the next phase of economic growth. And that we can see with all of these companies, including IBM today announcing a $150 billion 5-year capital investment commitment, which comes after a collective, literally hundreds of billions of dollars. We're going to see trillions of dollars invested in AI and data center and IT and data center infrastructure over the next several years, this is going to be a powerful economic growth driver.
It's interesting when you bring up IBM. IBM's actually a winner this year, which is not, last year I can't even count probably on one hand the amount of times we talked about IBM, and it's outperforming all of the Mag 7 this year. How are you thinking about market leadership as we start to think about, the next few months of the year into year end? Do you expect overall tech to start to lead this market again, or is it going to be much more of an individual stock kind of story?
Well, I think the tech sector will continue to lead the market higher. And collectively, it is companies like Nvidia. And Nvidia has, nobody is going to catch Nvidia. Every time somebody else, whether it's Huawei, AMD, anybody else comes up with their newest GPU, Nvidia is already way ahead. They have the Blackwell Ultra coming out in the second half of this year. They got a new processor coming out in 26 and 27. They are so far ahead of everybody else. And for the most important inferences and AI platforms and applications, you're going to want to run the fastest and best chip because that gives everybody their competitive advantage. Remember, all these companies are competing on this AI front, and they're not going to cut costs because cutting costs could risk their leadership or position or competitive advantage. And it's not like they don't have the resources to spend. So it really is an arms race of who can spend the most to drive the fastest and best platform and drive this whole AI investment wave forward.
Okay, so it's clear you like the Mag 7, you're buying the dip there. What other names on the tech front are on your radar are you buying right now?
Well, also Oracle, and then you have companies that really are going to help provide this data center infrastructure. Companies like Landbridge and Texas Pacific Land, nuclear power reactor manufacturer Oklo, because you need for AI and data centers, you need power, you need land, you need water, and you need connectivity. So Broadcom and Cisco as well, and you need high-speed connectivity, and you need space, and as I said, you need power, land, and water for all this to work.
Okay, so bullish on tech. Any other areas of the market that you're bullish on right now? Are you diversifying away from tech because you have a lot of buys there?
Well, I think that the consumer is not going to be as weak as people are feeling. I mean, travel is going to remain strong. The cruise industry cannot meet demand. They have new ship. They're growing their capacity. They have new ships coming, and there's more demand than meets capacity. They are booked, almost into, for all of 2025. They're starting to get booked into 26. That's still strong pricing. They're seeing strong onboard spending, which is a major indicator of the strength of the consumer. Because you could say people pay for their cruise months in advance when they were feeling a little bit more flush. But when they get on the ship now, in today's environment, they're not actually pulling back on onboard spending. So for whatever, even if the consumer pulls back in other areas, I believe that travel will remain strong.
Okay, all right. Cruise lines having a good day today, although all of the major cruise lines well off highs from earlier this year. Ivan Feinseth, Senior Partner, Chief Investment Officer, and Director of Research at Tigris Financial Partners. Thank you so much for your picks and for your insights as well. Thank you.